Hello investors, traders, and Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your market update for Tuesday, the 12th of November. Well, the question is, are interest rates going to kill this bull market? And what we're looking at on the screen right now is the 30-year Treasury bonds. And what happens with interest rates in futures anyway is when the market goes down, it means that interest rates are going higher. So let me just put that on the screen for you so you see. So when the market's moving down like we are here, it means that interest rates are moving higher. So we just had a signal right here that interest rates are headed once again back down, indicating higher interest rates. Now this could be a catalyst for the market, and I can't imagine how they can keep interest rates much lower for much longer. So this could be the catalyst that really turns the market around. So watch interest rates very carefully because it could be a harbinger of things to come. Looking at Apple, the formation I wanted to share with you with Apple today was a pretty simple one, and that is if you just take the last action we've seen here, let's get a bit closer in on this, and you simply draw a trend line turning from here over to here and from here. It gives you that sort of look, that pennant look or the flag look, indicating if a breakout occurs on the upside, then this market can go significantly higher. I think there's good reason to think that Apple will break out on the upside, and I think we could see this market. So what we're looking for is really a move and a close over this level. So this would be confirmed as a sort of like a resting period to push the higher. Very similar to this period here when the market broke out and moved higher. I think that's the pattern we're looking for on Apple. And we still have the $580 to $600 level as a target zone. Next market is Tesla. Now Tesla has really taken on the chin here. We've gone from the highs, just around the 190 area, 195 area, and we've sort of plummeted down here. And today's not a good day. Now if we put our trade triangles in, remember our monthly trade triangles are the key. We had a trade triangle 3 days ago on Tesla. All of our indicators are negative. Now that's not to say Tesla can't have a little bounce up from here. I wouldn't be surprised to see that happen, but the reality is it is under pressure. It has come a long way. If you look at this just a couple of years ago, how this stock was sort of meandered around, suddenly boom, it caught everyone's imagination, and this is the first sell signal we have had, major sell signal in our trade triangles since we had a buy signal back here on the 19th of November 2012 for 32.78. So it's a huge move up. We've seen a reversal. Is it going to go back up? That's too early to tell. We'll have to watch the market and just see how it plays out. But moving along to Facebook. Facebook, you can see our monthly kicked in here. Nice move up. But also what happened, our weekly kicked in, which means really you should be exiting this stock at 46.50. Currently trading at 46.48, right around where we had the signal. Now, I'm not necessarily saying we're super bearish on this stock, but the reality is this is a signal. We have to respect it, and that's the difference between winning and losing in the markets. You cannot just ignore signals because you think, oh, I think Facebook's going to go higher later on. It may go higher later on, but it may stay down for months and months and months and even years in some cases. Here's the situation. Twitter is very, very popular right now, but Facebook is trying to do something to change that. Now, if we see that happening, we're going to see a change in the price and we'll get back in. It's just as simple as that. The longer term trend on Facebook is still positive with a green monthly. This is only an exit and protect capital and take profits. So the first signal we've had since this level here, $29, and we're getting out at 46. I think you'll agree that's a nice $17 profit on that position. Amazon is still pretty much the same thing. We're still long from the 298 level. You see right here in 277 longer term. But I think if you get this closer in, you'll see this type of formation. I think we need to see this market do a little bit better. Certainly where we are now and where we closed this time on Friday at 343. So we are higher for the week, but I'd like to see this market actually go back over the 360 level to get super, super excited about the market. I think it will. Potentially, it's still very positive on the trade triangles. Here's the Dow, and the Dow has actually been a laggard, but it's actually leading right now, so the Dow has done very, very well. They're a little bit lower for the week, but I think that's a little bit premature. The day is still young, but I think the trend is clearly up with all of our trade triangles. Here's the NASDAQ sort of limping along, a lot of pressure being on some of the tech stocks, Apple, Facebook, and so forth. So that's why I sort of pushed it down. But generally speaking, this market looks like it wants to go higher longer term. All of our trade triangles are in place, and we expect it will do that. So this is the S&P cash, pretty much the same thing. Looks like we closed last week. Here we are. We closed last week at 770. We're currently just a few points lower for the week so far, and it's only Tuesday, so I think we'll have a chance to come back and maybe close out the week on a positive note, especially if we see interest rates slide off just a little bit. Gold, the trend is your friend. It's been bearish, 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 continues to be down. We're going to challenge the lows, it looks like, recent lows here anyway, and I think if we take this out, let's just take it out a little bit further, you can see we actually have been much, much lower, and maybe we're going to test this level around here, the 1260 area, and possibly even go all the way down to the 1200 level. Gold cannot win any friends, and certainly the trend clearly has been down since 1672 and from 1284. So lots of opportunity there to be short and make money. On the euro, we're seeing a little bit of recovery in the euro. Longer term, the euro looks like the trend is higher, meaning the dollar is going to go higher, and we have a weekly, which means it's sort of a little bit mixed at the time. So 55 is a trading range. You see a number 55 on any of our charts with our trade triangles. It means it's a trading range and trade accordingly. There's no data, of course. This is Forex. It's a worldwide banks we're getting all this data from, and they don't report data to anybody. Crude oil, much the same there, minus 85, sort of a flat market. If you remember, we trade futures using the weeklies and the dailies, so you should be out of the market. We had a signal here. If I put the dailies in, you'll see we should have had a signal. There's the signal right there at 95.11. So you see we're in short from the last signal we had at 102. So this has been a nice profit for us, and I think that's actually the last signal right here was at 97.37, and that was covered at 95.11. So it's a nice $2 profit, about $2,000 per contract. So looking good. Adam Hewison for Market Club. Be sure to leave a comment, or if you have any questions about the markets, if you want to know how we feel about a particular market, do let us know. We'll do our very best to incorporate it in the future. Have a great trading day, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.